This screencast is about special journals. You'll read about these in Chapter 7. The reason we use special journals is to make accounting more efficient and cost-effective. And we don't like to spend any more time doing this stuff than we have to. You'll see we have some particular types of special journals. There's a sales journal. We use that to record credit sales. We have a cash receipts journal, and that records all receipts of cash, and that would include cash sales. So if you have a cash sale, we put it in the cash receipts journal. The purchases journal, we use that to record purchases on credit, so where we're buying things from suppliers, and we would record those to accounts payable. Those would go here in the purchases journal. The cash disbursements journal, we record all cash payments made. So whether we're paying payroll, we're paying vendors for accounts payable, any cash that's going out would be recorded in the cash disbursements journal. We also still have the general journal. That's the one you're used to using with the journal entries. And we still have that because there are a number of transactions that will not fit into those special journals listed previously. So we're still going to use the general journal in the format that you're used to. Okay? So special journals are customized for a particular business based on your needs. So you'll see we have some in the book. And those are good general guidelines, but just keep in mind, depending on the type of business you're in, you may change some of the columns or the look of some of the journals, okay? Because they're really made, the purpose is to make your life easier as an accountant, so we want to customize them as we need to. What I thought I would do is go through and take some transactions from the demonstration problem in page 296 of the textbook. And if you haven't been using the demonstration problems, I would encourage you to do that. They're at the back of each chapter, and they take a full-blown problem. So similar to some of the problems you'll see on the homework, they're going to walk you through it and show you the whole solution. But you could kind of do it ahead of time yourself, see how you do, and then check yourself with the book. So what I've done is I've taken a couple of transactions because I want to illustrate how one of these special journals works. I'm going to take the sales journal. So what I've done, I've got 3 transactions here, and therefore credit sales. Okay, so what I thought I would do first is we've got the entries, and what I did, I wrote them down as if we would record them in the general journal, as what you're used to. So let's take a look at the March 4th entry. Sold merchandise on credit to Jennifer Nelson, invoice 954 for $16,800, cost is $12,200. As you recall, with the perpetual method of tracking inventory, we have to make 2 entries for this transaction. First, we're going to see where we record the debit to accounts receivable and the credit to sales. If you're not doing 2 separate entries for these types of transactions, I recommend you do so. It'll help you keep your numbers straight and separate. So first we've recorded the revenue entry, and now we're going to go on and record the entry to cost of goods sold and inventory. What we're doing with the second entry is we're physically moving it out of our inventory into cost of goods sold, because we've sold these goods. They should no longer be listed in inventory. Okay, so we need those 2 entries for this March 4th transaction. Let's move on to the March 6th transaction. We sold merchandise on credit to Denny Hoskins, invoice 955 for $10,200. The cost is $8,100. Again, on March 6th, we've got the first entry, which is the revenue entry. We're debiting AR and crediting sales for $10,200. And then we're going to make our cost of goods sold entry here for $8,100 and our credit to inventory for $8,100. Okay? And then on to the third entry on March 20th. We've sold merchandise on credit to Marjorie Allen, invoice 956 for $5,600 with a cost of $3,800. Okay, so formats are just like the ones above. We've got our revenue entry, we're debiting AR and crediting sales, and then our next entry, we're debiting cost of goods sold and crediting inventory for the cost of the goods. Okay, so that's what we're used to doing up until this point, just recording general journals. Now, just to reflect a little bit, got a heck of a lot of entries going on here, don't you? And a lot of posting that you would have to do to the general ledger. Because basically you'd be posting one for accounts receivable, for example. You've got 1, 2, 3 entries, 3 separate line items you would have to post to accounts receivable just for these sales. Okay, so let's take a look at how these transactions would be entered in a special journal. into the sales journal, okay? So this is an example of the sales journal that we would use. Take a look at this. So we've only got 3 line items here for these entries, and they took the place of all of these entries up here. Kind of cool. It's nice when we can do things that are more streamlined. So that's one of the nice parts about these special journals. A lot of times we're entering the same amount into 2 separate accounts, and so on the special journal we can have this do double duty. Okay, so for example, let's look on March 4th, Jennifer Nelson. We've got the invoice number here, and this column here indicates anything listed in this column is going to be debited to AR and credited to sales. Okay, that's that double duty. So this one entry of 16,800 is taking the place of this whole entry up here. Okay, and then down here we've got the same thing going on in this column. We've got cost of goods sold, debit, and inventory credit. This 12,200 is taking the place of these 2 entries up here. Okay, so it's a lot easier way to keep track of your transactions and to report them into your accounting system. Okay, you can see that we've got March 6th and March 20th. We're doing the same thing. So we're recording the amount of the sales and the accounts receivable entry into one column. We're recording the amount of cost of goods sold or inventory into another column. And we continue to do that for each transaction during the month. Okay, so what I want to mention is up here in our general journal, we were having to post each one of these entries into our general ledger. Okay, down here in the special journals, we just run totals at the end of the month. We calculate totals. So this 32,600 and the 24,100 is just the total of each of these 3 items up above. Okay. The nice part is we can just post these once. So we post these numbers once to our ledgers, and we're not doing zillions of entries, because if we have a lot of volume, that could be a real hassle. Okay. So it takes the place of each transaction entry. I think it would be helpful to discuss some of how this is set up, because there are some items on the special journal I haven't yet talked about, and I think it would be helpful to understand the sequence of events for using the sales journal. So let's talk about that for a minute. First we record the sale on the line in the sales journal. So this is what we've done here on March 4th for Jennifer Nelson. Okay, we've got the debit to AR, credit to sales for 16,800. We've got the COGS debit and the inventory credit for 12,200. Okay, so we're just going to record those each time a transaction takes place on a daily basis. Okay, one thing we want to do on that daily basis is you've learned about here in chapter 7 about subsidiary ledgers, and basically that's a little ledger that we keep for each customer that does business with us, and we also keep those for accounts payable for each vendor that we're purchasing goods from. Okay, so I'm not going to cover subsidiary ledgers in detail in this screencast, but you can read about those in the book. Basically, we need to keep track of each customer's balance due and the amount we owe vendors, so we know if we need to follow up with them, or if they give us an invoice, or if they make a payment to us, what invoice we're paying off, so we can keep a current balance of their account with us. So we want to post the AR entries to the customer's subsidiary ledger that day. Okay. Once posted to the subsidiary ledger, we're going to enter a check mark in the posting reference column. Okay, that's what that PR stands for. This indicates the customer's AR subsidiary ledger has been updated so that we have a current balance shown in the customer's account. Okay, the check mark in the PR shows us, yes, I have posted this to Jennifer Nelson's account. That's what that check mark tells us. Okay, and that's all we've done on a daily basis. We've just posted it to the individual customer's account. We haven't done anything else with these numbers. They're still sitting here in the special, or in the sales journal. Okay, so we've done that on a daily basis, continuing to record our sales, posting to the customer's subsidiary ledger. Okay, then we get to month end, down here on number 3. At month end, we're going to total the columns. Okay, so in this case, we've got 32,600 and 24,100 in these columns. and we're going to enter those into the corresponding ledger accounts. So now we're going to post from our journal over to our general ledger for each of these accounts, okay? So take a look at what these totals up top would look like in each ledger account. For example, on accounts receivable, and our chart of accounts would indicate that accounts receivable was account 106. We'd have a date of March 31st. The posting reference would say SJ. That's the sales journal, okay? You could also add a number here at the end of what page from the sales journal if you wanted to do that. But basically, this is a pointer that this information came from the sales journal. So if I have any questions, I can go back to the sales journal on March 31st and see where it came from. Okay? We want to point back and forth, and that's called cross-referencing. Okay? So in this case, the debit is going to accounts receivable, 32,600. So we've got 32,600 in the debit column. And our normal balance for accounts receivable is 32,600. So if we're doing the balance forward format, as you are in your ledger, that's what our balance would look like. Okay, I'm taking this journal in isolation. You'll see that if you look in the textbook, you've got some other journals interacting. So you'll see some other entries into these ledgers. I just wanted to just take this through all the way. So on forward to the sales account, we're going to credit 32,600 to sales. Again, date 3/31, posting reference sales journal. Credit of 32,600, and the normal balance for a revenue account is a credit. So our balance in sales would be 32,600. Let's go on to COGS. So COGS is account 502, similar format, date 3/31, posting reference from the sales journal. The debit of 24,100 goes into COGS, and we've got a balance of 24,100. Last but not least, we've got inventories, account 119, date 3/31, posting reference sales journal. In this case, we're posting a credit because we're reducing inventory. It's coming out of inventory, going to cost of goods sold with a balance of 24,100. Okay? Couple of notes. Once the entry is posted to the general ledger, sales journal, SJ is entered to refer back. I've already mentioned that. On the sales journal, the account number is entered in parentheses at the bottom of the column to indicate, it's been posted to the general ledger. The account debited is listed first, followed by the credit. So let's take a look at this. Look up here. We've got, in parentheses, I've written 2 account numbers down here at the bottom of this column. I wouldn't write these in until I have posted these totals to my ledger. Once I've posted in the first column the 32,600 to accounts receivable and sales, I would then write 106. That represents the debit that went to the AR account. This 413 represents the credit that went to the sales account. Okay? And again, these are numbers based on my chart of accounts. Likewise, over in the second column, I've got 502 listed here. That means I debited cost of goods sold 24,100, and I posted a credit of 24,100 to inventory. So up here, you would always list the account that was debited first, followed by the account that was credited. Okay. You want to do that, so again, you're pointing back and forth. So say someone calls you on the phone and you get distracted, you get interrupted, you know where you've left off. If you've got this special journal, you're doing your work at month end and you don't see these numbers here yet, it's like, oh, I still need to post these to my ledger. Okay? But this is what your ledger accounts would look like after you post it from the special journal. And then we start over again with the next month and post new accounts or post new transactions. And just an additional reminder, the demonstration problem in the textbook, which I highly recommend taking a look at, it covers all the special journals. So there will be additional entries listed in the textbook. I just wanted to use a few examples and take a look at the sales journal. And again, that demonstration problem I'm referring to is going to be on page 296 of your textbook. It starts there and it's at the back of chapter 7. Okay, hope this was helpful. Thanks.